Good morning. This is Larry Edelson for my Uncommon Wisdom video market update for Thursday, January 6th. I hope you had a wonderful New Year's holiday, and I hope you have a very healthy, wealthy, and wise 2011. I want to go right to the markets now. We're seeing some pivotal action, pretty much as I expected, although it seems to be pretty surprising to a lot of people. Just as trading started out this first year, I have been warning you that many markets were overbought and overextended heading into the end of the year, and I've been expecting a pullback, a healthy one, a pullback nevertheless in gold, silver, precious metals, and in natural resources, and I believe that began on just the second full day of trading yesterday. We saw gold drop almost $40 an ounce and silver about $1.40 per ounce, or nearly 5% in a single trading session. Those are quite substantial reversals. So let's go take a look right now at the gold chart. As you can see here, the gold chart, this is yesterday's action, a pretty steep decline. We do have massive overhead resistance in this 1450 level, and I do not expect that to be breached. Quite the contrary, I'm expecting still a pullback to at least 1325 in gold and probably down to 1250 and perhaps even lower down around here to the $1,200 level. Silver similarly will fall, and even more dramatically. That is why, despite the fact that I have told you that silver has now finally proven itself in a long-term bull market, I don't want to be anywhere near silver right now, because silver can pull back quite sharply to at least $25 an ounce and probably even lower to $22 or $21 an ounce. So while there might be about 15 to 20% downside maximum in gold, there could be as much as 30% or even 35% downside in silver. That is not to say that you should let go of any of your core gold positions. In fact, if you're a Real Wealth Report member, I do have specific recommendations for you to take preventative and precautionary steps. That is going out hopefully today, Thursday the 6th, latest Friday morning. But if you are an Uncommon Wisdom reader and not a Real Wealth member, I urge you to basically sit tight through this correction in gold and look at the long term, because once this correction is over in gold, as sharp as it may be and as surprising as it may be, gold is going to head to new record highs later this year. Now, let's move on to ditto for silver, by the way. Let's move on now to the dollar index. The dollar index is still here pretty much in no man's land, this area that I've been showing you for the last couple of weeks. I do expect the dollar to strengthen towards this upper resistance line on this channel that you see here, on the line that I'm clicking at. That would indicate about just over 80 on the dollar index, and then it will probably punch through to about 82. But keep in mind the dollar is only rallying against the euro. It has recently, just in the last few days, fallen to a record low against the Swiss franc, against the Australian dollar, to near a record low against the Canadian dollar, to decade-plus lows against the Thai baht and many Asian currencies. So you have to look at the dollar from different perspectives today. The dollar index by itself does not tell you the whole story on what's happening to the dollar. It's telling you what's largely happening to the dollar vis-a-vis the euro, but not the rest of the currencies that are traded in the world. Now let's go right to the Dow Industrials. Just before New Year's, I showed you these blue rectangles again on the Dow Industrials chart. I did indicate this last formation here would lead to a punch higher, and that indeed has happened in the first couple of days of action in the new year. There is still the potential that the Dow might rally up to about 11,825, 11,900, but I'm telling you, the downside in the Dow is now definitely more significant than the potential upside. The stock market could very easily roll over here and start trending towards that important cyclical low I've been expecting, which could be as low as Dow 9,000. That could happen in the first or latest second quarter of 2011. From that point onward, we will see new highs in the Dow. But right now, I do not recommend being heavily invested in any stocks with the exception of holding core long-term gold and precious metals and natural resource stocks. Now, if you're a Real Wealth member, keep your eyes on your inbox for a very, very special report. If you're not a Real Wealth member, I urge you to consider joining. There's a link in the email that I'm sending to you for this video update. Please take a look at it and be sure to join Real Wealth Report. Become a member so that you can get my very urgent special report that is going out. Till next week, this is Larry.